Gold has always been the ultimate analog asset, tangible, timeless, a hedge against chaos. But in 2025, it's getting a digital remix that's nothing short of audacious. Tether, the stablecoin giant behind USDT, just snapped up 26 tons of gold in Q3 alone, pushing their total reserves to 116 tons, worth about 14 billion at current prices. This is not just impressive. It's outpacing individual central banks like Kazakhstan, Brazil, and even Turkey for the quarter, with Tether's overall hoard now surpassing Turkey's total of around 100 tons. We're talking a private crypto firm hoarding more bullion than sovereign nations, all while gold prices have rocketed 56% this year amid tokenized assets exploding to 3.9 billion in supply. So is this Tether flexing as a shadow central bank, diversifying reserves beyond treasuries to back their empire? Or does it signal deeper jitters about fiat trust in a post-dollar world? Here to discuss and more is Clive Thompson. He's a retired Swiss banker, and he joins us now from Switzerland. Clive, good to see you again.
Hello, Daniela, and hello to all your viewers. Yes, isn't it amazing that a company which is a supporter of Bitcoin decides to own gold, and actually a lot of gold and more gold, because quarter by quarter the number of ounces or kilos or kilograms of gold, or tons of gold in this case, it owns is going up. Now, obviously their other main asset is US dollars, because they're holding US treasuries. And we all know what's going on with the US government in terms of the debt, which is continuing to increase as a percentage of GDP year after year after year. If we go back to when the United States was on the gold standard in 1971, debt to GDP was 25%. In other words, the US debt was 25% of the GDP at that time. It's now, if we talk about the public debt alone, the debt owned by the public, it's now at least 100%, 4 times as much out of GDP. So the burden on US taxpayers and the interest burden has increased a lot. And according to the Congressional Budget Office, the debt to GDP ratio in the next decade is likely to go to 120%, another 20% up. And the interest burden, according to the Congressional Budget Office, is likely to rise a lot. The problem with this is, at some point, it spirals out of control. There's a sudden and unexpected loss of confidence. And how could you best hedge yourself against that loss of confidence except by owning gold? And I think that's kind of Tether. They're playing both camps. On the one hand, they're owning the treasuries, and on the other hand, they're owning the gold. So if there's a sudden problem with treasuries, they will still own something which is of substantial value.
It's just a fascinating strategy, Clive. I mean, I don't know if you've spoken to the people at crypto at Tether. I know they're quite secretive, kind of hard to reach folks. But what do you think their master plan is? I mean, because from what I've heard is that the Tether gold will be way bigger than the Tether dollar.
Well, that could be, but I think it's. I don't want to criticize what they're doing, because I think they're doing the right thing. But if you look at it from another point of view, they're going to come in for a lot of criticism if they hold too much assets other than dollars, because of course Tether is supposed to be a stable coin. It's supposed to be backed by US dollars. Now, if we go back, if we look at the total assets of Tether, which you can find on the BDO, I don't know if it's right to call it an audit statement, but certainly BDO are looking at those numbers and verifying them. They do hold more assets than they have liabilities in terms of Tether, and we can see that on the report. So they've got right now they've got assets which are worth, this is the Q3 assets, $181 billion, $181 billion US dollars. That's the total assets, but their total liabilities are less than that. their total liabilities are 174 billion. So a difference of roughly 7 billion between the two. But not all of that, they don't have, this is the problem, they don't have 174 billion in US treasuries, because part of that is in gold, part of that's in Bitcoin, part of that is in what they call secured loans. And at least that's what we see on the BDO report. So that's all fine because the assets exceed liabilities, and that's no different from any bank. I mean, all banks have assets exceeding liabilities, and the assets are not all cash at the U.S. Treasury. But obviously, I think the direction of travel for stablecoins is that they're supposed to be 100% backed by treasuries, and that doesn't appear to be the case at the moment, because it's backed by other things as well as treasuries. It's got treasuries. If I look at the actual treasuries, I'm looking myself here. The treasuries are $112 billion, so way below the 170 something they need. They've got other assets, overnight purchase agreements, and so forth. But the difference, if we come back to the difference between their liabilities and their assets exceed their liabilities by about $7 billion, but they've got more than that in secured loans. They got 14 billion in secured loans, whatever those are, I don't know. They've got nearly 4 billion in what they call other investments. They got 9 billion, 10 billion nearly in Bitcoin. They got precious metals of nearly 13 billion. So the question starts to become, are they, I'm not saying they're not fully covered. Of course they're fully covered because they got more assets, but will they come in for criticism by people who say they should have more treasuries?
Right. Well, I guess, what is the concern? If the stable coin is not fully backed by treasuries, right? What is the risk or concern there?
Well, the danger, and I'm not going to say it's a big danger,
yeah.
but the danger is if any one of these other assets drops to, I mean, in an extreme example, zero. So if you take your secured loans, which is 14 billion, and they drop to zero, well, they don't have enough. They're all covered one by one. If you take the Bitcoin they've got, which is nearly 10 billion, and it drops to zero, I mean, we're not expecting this to happen, but they're not covered one by one. If you take the gold at 12, 13 billion, and it drops to zero, we're not expecting this to happen. Of course, we're expecting the opposite to happen, but they're not covered one by one. So, you know, from a critical point of view, some people might say, you're not doing what's written on the tin. You're supposed to be backed fully by treasuries, and you should have 171 billion of treasuries to cover 171 billion of Tether.
We'll jump right back to the interview, but this is too important to skip. The real risk today isn't just a market crash or recession, it's the US dollar being reset, revalued, and losing all purchasing power. Prices keep rising, incomes can't keep up, and central banks around the world are buying record levels of gold because they see what's coming. You can't fix the system, but you can step out of the line of fire and position yourself the same way they do, like a central bank, not a common investor. That's why we built the Private Wealth Playbook. It's free and it shows you exactly how to protect your wealth, privacy, and retirement through whatever comes next. So click below or go to DannyReport.com and secure what's rightfully yours. Let me ask you this question, one more question on Tether before we move on to our next topic. Because there's been buzz with, obviously, gold bugs excited by Tether's purchases, and there's been suggestion or thought that their purchases alone and their purchases going forward are enough to put a floor in the gold price, that this will keep propping up the gold price. Thoughts there?
Well, I think, first of all, I think they're doing the right thing, and I think they know what they're doing. They're no fools. Buying gold is a smart move in the environment we're in. After all, we've got a lot of things which say that gold really should go higher. We've got the geopolitical risks around the world. We've got the expectation that interest rates will come down in December. We've got very large fiscal deficits out of the United States, which are not being properly addressed yet, and maybe never will be. We've got central bank buying at the rate of over 1,000 tons a year, and probably going to be at records going forwards. So there's a lot of things going on in the gold market to say it should go higher, and they're not going to go away. But there's two things I think which will push the gold price higher in the coming 12 months. The first one is change in asset allocation amongst those who have their assets advised or managed by others. And we're talking about something like 300 trillion of managed assets, of liquid assets in the hands of millionaires or wealthy people. This would be bonds and equity. I'm talking about bonds and equities, really, not property or anything like that. So 300 trillion. You only need a very, very tiny proportion of that, less than 0.2% of that, to move into gold, and it will absorb the entirety of the annual production of gold this year.
Clive, just moving on now, I wanted to bring up another important headline here with Italy in the news and gold. Italy presses ahead with claim on central bank's 300 billion gold pile. Giorgia Meloni about to blow up the neighborhood in the European Union, perhaps here, Clive. Italian ruling lawmakers intend to press ahead with a claim that the central bank's 300 billion in gold reserves belong to the state. So the question is, who does Italy's gold really belong to? And why are we talking about it now? Because of the run-up in price? Why so interested, Italy?
Well, the Italian central bank, like many central banks, is not owned by the government. It's effectively privately owned by the banks. And what government wouldn't like to get their hands on some asset in order to reduce their deficit? So if they can find a way to move that asset into the government's finances and call it a profit, doesn't mean to say they've got to sell it. They can just, if they start with nothing and end up with an asset, they've got a profit. And if they've got a profit, they don't then have a deficit, or not such a big deficit. They can potentially say that their liabilities, which are well above the European Union's guidelines, are not as their liabilities are not as high as they should as are made out, because they now got them covered by assets. So I think it's that's from a government point of view, of course. From another point of view, it's outright theft. But from the government's point of view, they're doing let's call it an accounting trick. By if they take those assets and say it's ours, they're basically creating money or assets out of thin air, which will improve their financial situation, because countries like Italy and France are in dire straits with the level of their debt.
Just one more point on this, because I watched the original interview on Italian news where they said the reason they also want this gold back, or want their gold, it was aimed at preventing the gold reserves from being improperly used in the future. This was a quote from Senator Milan, who was from Prime Minister Giorgia Meloni's Brothers of Italy party. So there's fear that the reserves would be improperly used in the future.
That's a very strange statement. I mean, what I wonder what they would regard as improper, being
exactly.
Yeah, being sold, maybe.
Perhaps.
It's quite hard to figure out what they mean. I mean, or are they thinking perhaps that someone would steal the reserves? It doesn't. I can't actually see how that makes sense, because the central bank of Italy has got these reserves. They're probably locked up and very safe, and I wouldn't imagine for a moment they're going to go anywhere.
Final thoughts, Clive. Let's talk the silver run here. Obviously, silver bulls rejoicing with what's happening in silver. Thoughts on this run up in prices?
Well, it was very interesting on Friday where we had that very long outage on COMEX, where it was an overheating problem, and they weren't there was no trading and they weren't delivering prices. Because as that happened, the gold price on the spot market shot up by 5%, and it stayed there. It's gone up again today. So I think what was happening, if we assume that there's shorting going on COMEX to suppress the price, suddenly, whilst the suspension of trading might have given the shorts of breathing space, the real and true price of silver came out. And that was the period when it jumped by 5%. Now, obviously, there's going to be conspiracy theorists who say,
Right.
wasn't it very convenient that it broke down just as silver was hitting an all-time high? But I won't go with it. I don't think I want to trade on the back of a conspiracy theory, but it's what happened, and suddenly the shorts weren't able to suppress the price by selling it for the futures, which would have brought the spot price down, and the spot price then found its own level at a much higher level than it had been the day before.
I think you said that brilliantly, that the true price of silver may have been revealed, Clive.
Well, that's what I think. Obviously, we were now in a market where we have only cash buyers and sellers, as opposed to a market where you've got cash buyers and sellers and future sellers.
On the topic of conspiracy theories floating around, I'm just going to throw this in. I know we were talking about it offline, and I haven't been able to confirm it from my sources here in New York. But this news took off like, a fire on X over the weekend, that apparently JP Morgan moved its gold trading desk completely from New York to Singapore on Thursday. Obviously, American Thanksgiving here. No press release, no news about it, but that happened. Again, I have not confirmed this news, but people are reacting to it like it is fact on the internet.
Well, some years ago, the gold trading desk, or JP Morgan itself, got fined for criminally manipulating the gold price.
Of course.
And some of the mentions have suggested that people might be fleeing the U.S. jurisdiction by going to Singapore in a big rush before perhaps something happens. Now, that's what people are saying, and I don't buy that, because if that was the case, it would mean the entire firm is criminally liable for trying to help evade U.S. justice, and I don't believe they would do that. I find that absolutely, totally implausible. I know they make mistakes and get fined and things like that, but to think that they would want to participate in a scheme to help potential suspects flee the States just before subpoenas arrive, I find that impossible. So I think this news is most likely made up and probably not true at all. That's my assessment.
There we go. Clive Thompson. Well, thank you for this roundup today. I appreciate touching base with you and getting your thoughts on the latest headlines here.
Thank you very much, Daniela, and thumbs up to all your viewers. Thank you, everybody.
And thank you all for watching. We'll have more great content coming your way. As always, I invite you to reach out to my colleagues at ITM Trading. Tell them I sent you. They'll take extra great care of you. There's a link below in the description, and we'll see you soon.